Thinking about getting into rental property to make some extra income or start a new career as a landlord? On this edition of Money in Your Pocket, we'll talk about the ins and outs of becoming a landlord with our guest Bob Becker, who's an appraiser and a landlord. We'll learn more about what it takes to get started, what are the real costs, and what it takes to be successful in the rental business. That's all coming up next on Money in Your Pocket, so don't go away.
This program is made possible in part by Credit Union One. Proud to support Money in Your Pocket. Credit Union One offers savings and lending options. Additional information on membership available at creditunion1.org. Loans subject to approval. Accounts are insured up to $250,000. By member's choice, this institution is not federally insured.
Welcome back to Money in Your Pocket. I'm your host, Lori Banks, and today we're talking about rental property and if it is right for you. And Bob Becker joins me today, a seasoned landlord and real estate appraiser. Thanks for coming over.
Yeah, thanks for having me.
So why did you decide to get into rental property in the first place?
I'd read a book whenever I was a junior here at Eastern, and it kind of changed my perspective on everything, and just went for it after that. So
okay, tell us a little bit about what kinds of properties do you have and who are your renters?
Mainly is we have single family houses in the Mattoon area. We do have a couple apartments in Charleston. Not too many students, but a few mixed in there.
Okay.
So.
Well, I'm sure you get people that call or friends that ask, hey Bob, I want to get into rental property. It sounds like a great way to make some money. What do you tell them?
After I tell them to run, then it's more of an education of what actually it means to be in the rental property, and you see kind of all the positives when they call me and want to discuss it, and there's not much thought on the negative side, and there's quite a few negatives to consider when getting into it.
But there's some positives, which we're going to talk about a little bit later. What do you think is the biggest misconception people have about getting into rental property and being a landlord?
Probably just they just look at it as big money, and everybody that's in the landlord, all the landlords have a lot of money and that kind of stuff.
And it takes a while to get there, so it's not big money right away.
Yep.
But it can be somewhat big money later down the road.
Sure.
Okay.
Yep.
So let's talk about if someone is bound to determine, maybe for various reasons, they have some extra money, they can buy some property. What are the steps that they should go through to get themselves started?
First, probably build up a little bit of money, just like any business, is to have reserves set aside so that once they do finally identify a property they want to purchase and make the purchase, then they can be ready for any, big capital improvements that may come up, or a broken water line in the middle of the night, or just any repair items that will come up.
So you got to think beyond just, I'm going to spruce this house up and I'm going to paint and put some new carpet in. You do need to set some money aside for those big ticket items that will come up.
Yeah, absolutely.
Are there certain types of properties that are more rentable than others? Are there certain characteristics that people should look for if they're thinking about buying maybe a house to rent?
It's just condition and quality mainly. If you provide a good product that's clean and well kept, in decent neighborhoods, then they're going to rent better, obviously, than some that are maybe a little bit more ran down or whatever.
Okay. So what kind of pitfalls should one expect if they're going to get into this type of work?
Well, the midnight call of the furnace not working, that's one. Or you always have the situation where you've entered into a lease with a tenant, and 3 months later they decide they're moving out of state and they're taking off, and so you're there with a house that you need to get ready to rent again and make it presentable. And then like we talked about a little bit, is the financial. If the roof does start leaking or any number of repairs, that could be a big deal also.
You've got to be ready for that. You had talked before the show, you have something called retail investors and wholesale investors. Can you explain the difference between the two?
Yeah, so a retail investor we look at as somebody that's probably not going to buy the single family house. They're going to buy, the bigger apartment buildings, and they want to be completely hands off. They've got money set aside that they're looking at retirement. They're going to probably have a management company run it for them. They're going to hire maintenance to do all the other work. Whereas a wholesale investor, they're more hands on. They're going to buy it. They have maybe some skills to fix the property up and do the maintenance, and they're going to be there, more intimate with the property.
So in our region, because I know you're part of the Coles County Landlord Association, where do most of the landlords in our region fall into? Which category are they in?
The majority of them are the wholesale investors.
And are a lot of these people doing this as a side business or a full-time business in our area?
You have a mix, but the majority, I would say, would be full-time business or supplement with, maybe some other contracting work or something like that they do.
Okay. So I want to talk about the tenant, which you joked is sometimes, you need the tenant, but sometimes they can be the most challenging part of this whole process. First of all, what kind of screening, do you do any types of screenings, or how do you find good tenants?
Sure. So we have an application process. I know some landlords will charge for the application, which we don't, but some do. And then we look criminal background. We don't do much credit checks or anything like that, but look at that. Maybe call some references if they're available, things like that.
What about when it comes time to lease and signing that document? Where do you get the lease document? Is it a legal document? Where do you get that from?
Yeah, ours is a combination of just years of doing it. I mean, we got our first one off the internet, off of a legal website. I think it was like $20 or something, and then we've just continued to add to it.
Okay.
But probably the best thing to do would be to talk to a lawyer, because we do have a lawyer review ours every couple of years.
That's what I was going to say. What kinds of legal documents do you? I mean, is that lease a legally binding document?
Yes, absolutely.
Okay.
Yep.
So you may, if you're going to get into this, you've got to have, some money, maybe some practical skills to be able to fix and maintain stuff. And you also need a lawyer. Do you need have to have a lawyer?
I don't think you probably have to retain one, have one on retainer, but one that would be able to at least draft a lease or look over a lease that maybe you have found somewhere.
So what are some things that maybe you've learned over the years that you've added into that lease that, because of, your experience, you've added that you didn't have before that maybe someone starting off might not even think about?
Sure. A lot of, like the rental policies, a lot of tenants don't even know that, or don't even think about what happens to their belongings inside the house if the house becomes damaged. That's a separate insurance policy that they would need to carry. So we've put that on there. We've put information on there as far as what we do with the deposits. Some will have, if they have a pet, there's a mandatory cleaning deposit. Things like that. Smoking, we have a mandatory cleanup deposit after they leave. So
what about, you talked about renter's insurance. Is that something that you require people to have or not?
We personally do not. Some landlords do, but we do make it expressly known in our lease that we do not provide any protection for their personal items, and we suggest that they get it. And we even make them sign a little line item thing says that they understand that.
Okay. So this deposit, what's standard around here for a deposit? Is it 1 month's rent, or
typically
what's the going rate?
First month's rent.
Okay. So how do you determine if they get that back or not? Do you just have like a little deduction list?
Yeah, we will go through, and a lot of times what we'll do is take pictures of the property before they move in, and then after they leave, and then determine if there's any maintenance that's required, as far as carpet cleaning or painting or repairing any items that they broke, maybe a door or something like that. And so we'll walk through with them, Typically, we try to take them with us on the walkthrough and explain stuff. But really, we give quite a bit of our deposit money back. The tenants that we've had really take care of the properties pretty well. So.
Okay, let's talk about setting the price for a rental. How do you determine, should it be $500, $700, $1,000?
Well, with our situation, we're pretty good because with the appraisal side of it. I'm talking to investors all the time with being a member of the Landlord Association. And I would suggest that if you're first getting into it, seek out a Landlord Association, call a few appraisers in the area, and just kind of get an idea from them. And then after you've been in it for a while, you get a feel for also what the market's going to accept.
Okay, so let's talk about, let's say you're renting a property for $650 a month. Where does that, when that $650 comes to you, where does all that $650 go? Because I'm assuming you don't get to pocket all of that. It goes for other expenses on the business side.
Unfortunately, the majority of it does. But most of the time you're going to have some kind of mortgage, typically. You have property tax, that's going to take up a lot of it, and then insurance. Those are your three fixed expenses. Some variable expenses would be if you had any minor repairs to do that month, or saving money back for big capital improvements is always a good idea also.
So of that $650, how much are you maybe left with at the end of the month by the time you pay taxes and insurance?
Well, there's so many variables. I think most investors on a single family house try to shoot for somewhere between $100 and $200 a month, something like that.
So really that's not enough to quit your day job for.
No.
And you've got to add in your time as well.
Yeah, absolutely.
So if you really don't have, it sounds like the more really to get some more money in your pocket, you need quite a bit of rental property or a few things going.
Yeah, to consider it a business, and you need to build it up more than just a few. Like you say, it may not be worth the time just to have one or two. For some people, it's not worth the Saturdays going over and painting the
mowing
property
the lawn, shoveling. How do you determine as a landlord what you should include in the rent? Some it includes trash, water, cable. Some includes nothing. How do you decide that?
A lot of it's the type of property.
Okay.
If it's just a single family house, we'll typically not include that, and that's pretty standard in the market. If it's an apartment building that say has only one heating system, then of course we'll pay the heating, and with the apartment buildings you typically pay the water, trash, that kind of expense also.
Okay. What about pets? Do you allow pets in your property?
Some of the properties, and for us it really just depends on what kind of floor coverings we have in the properties. Some of our properties have all solid floor coverings, so hardwood or tile, and so we'll allow cats and dogs in those. With the insurance, we're not allowed to have certain types of dogs, so we do check on that. But
is that more of a common thing that renters are wanting renters have pets and they're looking for something that's pet friendly?
Yeah, it seems like that's the most calls we get is first thing that we're asked is, do you accept pets?
So maybe a good idea to put in some concessions for those pets. Let's talk about the rental market in our area. Are there times where there's, we'll take out, obviously we've got a university and a 2-year school, so probably there's more properties open in the summer. Take that out of the equation. In general, rental property, are there times when, if the economy is doing this, more people are renting versus not more people buying?
Yeah, in our area, I would say it's been pretty much stable. Nationwide statistics show that like 2009, 2010, when the housing market was crashing, then there was a huge spike in rental dwellings, and actually apartment property types still continues to exceed all other commercial types at this point.
What about for someone that's thinking, well, maybe I'll buy a duplex and I'll live in one half and rent out the other? Would you tend to have more return on your investment in that situation versus renting a standalone house and you living somewhere else?
In that it's kind of unique. It would all depend on, purchase price and what the rent was, and there's just so many factors. But the issue with the duplex is having your problems right next door. It would amplify it. I think it might be a little rough.
So that's also something to consider. Let's get to tax time and tax implications. Are your taxes and the things you have to keep track of different than other small business owners?
The way we have it is we're just sole proprietor, and we own these properties.
Okay.
So for us, it's no different than any other investment or whatever. And I'm not sure on the corporate side if you were to set up a corporate entity or something like that. It may be different.
Okay. Are property taxes taxed differently on rental property versus like the property taxes you or I pay on our personal home? Is it higher or lower?
Yeah, the one big thing is, so like you own your personal house, you can have a homestead exemption, which lowers the assessment value by about $6,000.
Okay.
So on a standard house, that's about $400 to $500 in tax value, which in Coles County, you cannot get the homestead exemption on a rental property.
Okay.
And so, you'd have that $400 to $500 difference.
Okay, so that's another thing to think about.
Yep.
Run us through some of the things that you go through and how much time it takes. So once you get someone in the property and it's all cleaned up, they live there for a year. Over that course of the year, how much typical time might you be spending over that property? I'm guessing you don't just see them when they move in and then when they move out.
Some of them you do. It just depends. Some of them are pretty self-sufficient and they would rather, not see you. So,
you'll make surprise visits.
Yep. And then, some of the properties that are, more troubled properties that maybe we haven't kept up as much, and so we are over there more times, and on those it could be once every couple months, something like that, for maybe 5 or 10 hours.
Are people surprised at how much time they may actually be spending in these properties? Do they tend to underestimate that?
I think so. Especially on as we talk, the wholesale side, that's going to require a lot of your personal time at the residence, fixing the minor stuff. Yeah. What
makes, if someone's looking at rental property, what makes that piece of property more appealing to renters? Because there is a lot to pick from. Are there certain attributes or certain things that people might want to think about putting in their rental property to make it more attractive to renters?
Yeah, it just depends what market you're in.
Right.
Obviously, the Mattoon market is, you got quite a bit of the same housing style, and no location is necessarily greater than the other. So that all comes down to condition, I think, of the dwelling. And if you're talking about the Charleston market, then the location to campus.
Right. So still location.
Absolutely. Yep.
What is the typical return on investment? I think you had said it was a percentage for rental property.
Yeah, more of a dollar, I think.
Okay, $1.
Yeah.
Okay, and that was that $100 to $200 a month? Okay.
Yep.
So at the end of the day, why did you get into rental property, and are you happy with your choice to do it?
Well, because every real estate book I read said that it was passive income, so I thought it was going to be passive income. And, to my surprise, it's
not.
Pretty labor intensive.
Is it?
Yeah, and so yeah, that's the reason that we got into it. But looking back, I would do it all again, because at the end of the day, I'm still my own boss.
Right.
And so.
But you also have another job as an appraiser,
yes,
correct? And is that a full-time job?
Yeah, full-time.
Okay.
Yep.
And your wife is in the business too, in your rental property business?
Yeah, and she manages everything.
Okay.
On the rental side. So.
Okay, so you guys still have you have another iron in the fire.
Yeah.
So to speak. So what kind of, we want to flip this around, because it seems like, well, you don't make a lot of money, it's a lot of work. It doesn't sound all that appealing, but talk about some of the, you kind of alluded to it, some of the benefits of being a landlord.
Yeah, I mean, once you get it up into an actual business model and it's generating, some income, then the freedom to, set your own schedule, be your own boss, that kind of stuff is probably the biggest in our eyes.
But what did you say were your wife and you were on vacation and she kept getting calls
yeah,
from
but
tenants?
that's my wife. I mean,
so you kind of never really get away if you're a good landlord.
No, you don't. I mean, she's on the phone, I would say probably 4 to 5 hours a day just talking to either current tenants or prospective tenants.
So half of her day is on the business stuff or in the landlord stuff.
Yeah.
I want to ask then, who makes a good landlord? The ones in our area that have been really successful at it, what are they doing?
The really successful one, I think, are the hands-on. They're there at the properties. They take a interest in the properties. They're keeping them in good condition. That kind of stuff. The ones that have struggled, I think, are the ones that are more the retail side that have, big corporate management companies come in and try to manage it, and they're not on site and looking at the properties and that kind of stuff.
So your recommendation for this area, maybe not for large metro areas, is to really be a hands-on and be involved in
absolutely.
properties.
Yep.
Okay. And again, if someone is thinking about this, where should they go for advice? What was that book you read, by the way, that changed it all for you?
Is Rich Dad, Poor Dad.
Okay.
So, yep, and that's that was what gave me the idea that all real estate was passive income. So.
Well, it gave you the idea, but do most tell us about in Coles County we have this landlord association. What do you guys do, and do most counties have something like that?
There are several around the area. Some of the more rural counties don't have, but and we have members from outside of Coles County, even though it's the Coles County Landlord Association. But and that's what we do. We try to take new landlords and just give them education as far as here's what to expect. Maybe give them some ideas of what to throw on their leases to protect them, and ways to protect their tenants also, and that kind of stuff. We have a meeting once a quarter, and we try to get a broad range of speakers in there about anything and everything that would interest landlords. So. Okay.
Well, there's resources out there, and we have this show that we just did, which opened my eyes, because my husband and I had 2 properties. It was his house. It was sold. It was paid for. We thought, for about 2 minutes, we thought about renting it, and then we decided, now we'll sell it. Yeah. I think after hearing this, as you said, with one property, it may not be the best. You may not be rolling in the money like you think with one property.
Especially in our area, I think.
Right. So, well, Bob, thank you so much for coming by and shedding some light on the ins and outs of rental property and being a landlord.
Yeah, thanks for having me.
Thanks. Thinking of becoming a landlord? Here are a few things to consider. First, buy smart and don't overpay for the property. It's going to take some time to pay off the mortgage, and the more you spend, the longer it will take to get a return on your investment. Next, research the real costs. That $650 rent payment isn't all going into your pocket. You'll have taxes, insurance, and upkeep to pay for. Next, put aside money for capital improvements and repairs such as a new roof, appliances, or furnaces. Run your rental business like a business. Bob says that the most successful landlords are hands-on and based close to their properties. If you pay close attention to your properties and take care of them, your tenants will notice. And finally, get advice from other landlords. Look for a landlord association in your area and talk to the people who know the business best. And that's our show. For all of us at Money in Your Pocket, thanks for watching, and we'll see you next time.
This program is made possible in part by Credit Union One. Proud to support Money in Your Pocket. Credit Union One offers savings and lending options. Additional information on membership available at creditunion1.org. Loans subject to approval. Accounts are insured up to $250,000. By member's choice, this institution is not federally insured.